What's up, everybody? Michael Silva here. You're watching and Coco here. The Daily Stock Market Brief, the show that I do Monday through Friday, 5 days a week. Today, we're bringing it to you on a Saturday. We're going to be recapping the week, looking at daily time frames. We're going to be looking at weekly, daily, and then also a couple 30-minute charts. Also going to be looking at stock market indicators, commodities, relative rotation graphs as well, looking at some strong sectors. We got a lot to talk about today, and you're going to notice... Did I just see a peace sign? What was that? Make sure to thumbs up and like the video. You're going to notice that I'm doing the video a little bit differently. This is just to see kind of how it plays out. I can do cool things like that. We got a lot to talk about today. Let's go ahead and get into today's show. All right, everybody, welcome back to the show. We're going to start off here looking at a relative rotation graph on the weekly time frame. And what this is we're looking at the balanced index fund. So, well, that was kind of weird. Sorry, I'm still getting used to this. This is so trippy. I guess I could make myself a circle like that. That could be a little bit easier. You got to let me know. I could also do things like this. I can go make myself bigger, smaller, and I can go like this. I can go, ooh. So trippy. All right, so really quick here. We're looking at a relative rotation graph of a total balanced fund. So this is including things like commodities. It's including things like the total U.S. stock market, the Bloomberg Commodity Index. We have cash settlements, real estate, treasury bonds. You can see everything down in here. I don't know why that thing keeps on. Let me go ahead and just turn that off there. That'll work a little bit better. So really what I want to call out here on this rotation graph here is just what's leading the way for these last 13 weeks. And what's leading the way here is the GSG. And that there is the iShares S&P GSCI Commodity Index Trust. All right, so keep that in mind. So now when we pull that up on a long-term time frame, what I want to call out here, this is one on the weekly time frame. First off, we have this area of support going back to 98 or so, and you can see it bouncing kind of through that area. And then during the financial crisis, we broke through and then created a level of resistance. So what I want to call out here is we've been just putting in lower lows, lower highs, all the way down, as you can really just see throughout the chart here. You can just see it just heading straight down, and you're also putting in little stair steps down here as well. But we're coming into this area right here that looks like the possibility to start breaking out. Why does I think that it could start breaking out? Well, simply because the rotation graph is kind of saying that there's a lot of relative strength coming into it. Now, we are overextended to the upside, but we've seen previous times that, countless times you can see it kind of shoot above and hold up in those areas for quite some time. I'm going to go ahead and remove myself from the camera here for a moment. Makes it a little bit easier to focus. Up, Coco, come on. Coco, this is a mess. You try to do something new, but it is what it is. The content will remain the same, but we're just doing the best we can here to make it more interactive. So yes, I wanted to point out this because if we start breaking above this and this then becomes a new area of support, this is just saying that to me, inflation is going to, the market is pricing in inflation, which we can see that in the yields, and we'll go over that. But it also states that this thing could just be the early stages of a really strong breakout, which means you can look for things, that make up the commodity index, the GSG, or you can look at various other commodity plays to find a lot of strength or good setups to invest in. Now I want to look at relative rotation graph of the SPY. This is one that we go over fairly frequently. On last week, we did it on the weekly time frame. This is only looking at 5 weeks, so just over a month worth of trading. And you can see here, taking the top spot is still energy, and energy has been at the bottom of the performer on the daily, then the top, then the bottom, and then back at top again just on the closing bell of Friday. When we break into the energy sector, what I want to show you here is the various stocks that can make up the energy sector. All right, so we have some strong rotation with stock names like OXY, FANG, MRO, DVN, and you can see them kind of rotating around in this leading department. Now, what you could do from Coco, you got to stop pressing that. Gosh, Coco keeps touching everything. What you could do from a relative rotation standpoint is start looking for things that are strengthening or coming into the improving section to find good setups with, or you can buy these performing names on pullbacks. So what we'll do here is we'll look at the various names that make up that energy sector. You can see here in the green, this is the leading, then you have improving, weakening, and then the lagging down here, COG, WMB. But if you want to screenshot this, you'll get a good list of ticker symbols that make up that energy sector, and you could look for good setups within all of that. All right, so now it's time to get into some indices. Let's look at the S&P 500. Coco wants to say hi again. Hello. The S&P 500, let me go ahead and switch that over. On the weekly time frame, we're going to start off looking at that. Now, what do we got going on? So what did we talk about last week? We talked about these blue boxes taking place here, forming. Now, we noticed these blue boxes because it was bringing in a very sharp down red week, as you can see in all the boxes, but then it was followed through from an instant buy back, creating a very strong piercing type pattern from the weekly perspective. And it usually fell right to the 13-week moving average. So what we were saying was, typically when that happens, we saw strength bounce from that level. And you can see the S&P 500 closed at an all-time weekly high. And we saw that continued strength take place here. This is the S&P 500 on the daily time frame, and you can see here we had a strong day closing out the day on Friday, but we're still holding that area of resistance. So it's going to be up to the bulls to see if we can start breaking out. Now, this was a 1, 2, 3, 4 bar breakout so far, but we're still kind of within that trend line. The price percent oscillator is trending up, so that is a good sign so far. We'll see if this momentum continues. You gotta, be very careful trading this environment, but we are seeing some strength come in to play here, as you can see. On the 30-minute time frame, what we marked out here was the symmetrical triangle. We did that on Thursday night, I believe it was, and we said, hey, if it gaps up, maybe it can come back and act as support. We didn't quite get the gap up, but we did break out, back test, and then on the last 30 minutes of trading, we did go significantly higher, as you can see, just a big run up. Now, what can take place on Monday? Well, first off, take a look at the RSI. The RSI is going into that overbought territory, and if it does continue to, gap up or continue to that overbought territory, be careful on gap ups because we could get pullbacks into that, and then maybe see continued strength. This technically broke out of this prior resistance at around 392. It could be considered a double top at this particular point in time, but we do not have that answer. Overall bullish context and a bullish breakout. So, when I look at this, I look at, just more continued strength. That's what the chart is telling us right now. All right, so now let's go ahead and go into the Dow Jones. And by the way, since I'm new at doing all of this stuff on camera, well, not new on the camera, but new with the whole, outlook, you want to let me know if this is actually a better way to show you more something like this or like this, and just timestamp it in the description below, because I can always adjust how I look while we're going through the slides, if the bigger slides are better or not, or if you prefer it the other way. I know there's going to be a lot of mixed up reviews on everything, but it is kind of fun. It's just a little bit easier to I can get your attention when I'm trying to talk and tell you something like this, or I can just kind of get back small when I want to show you back the chart. So weekly time frame on this chart, let's get back into it. We marked these blue boxes out last week, remember, coming down into the 13-week moving average. And we saw that big red drop followed by instant buying back and then continued strength. We're seeing a very similar thing take place right here. Now, if you remember me talking about the descending broadening wedge pattern in previous videos, the target that we set was 32,000. Now you can't see that here on the weekly time frame, that pattern, but as you can see, we do see continued strength as the market is making new highs going forward there. So strong look overall for that. Let's go into the daily time frame. Daily time frame, remember we were talking about this area of resistance, and when we broke above, we just went sideways for a while, consolidated, then moved higher. Well, we also stated that that's a very big possibility to have the same thing take place. We broke out, we went back tested, just a small range candle, a little bit bigger, and then the big brother doji candle here, you can see it's pretty interesting price action. And then the last trading day, you can see a very, very small range candle as well, which still tells me that momentum is consolidating right now. So we got to be careful here. Obviously, it's in bullish context, so maybe we see continued strength, maybe we don't. It's very hard to tell during periods of consolidation, but what we got to look at is ideals that are in our favor. And the ideals that are in our favor right now is bullish context. You can see that by the moving averages, 20 sloping up, 50 sloping up, 200 sloping up. What I will state that I didn't state on the S&P 500 slide is that if you look just right, basically right here, that 50 period moving average. So we pulled back into the 50 period here, bounced from it, as you can see. And then what took place in February of last year is we came down to the 20 period, but then gapped down below the 50 period. And that's when you saw that February crash. So if we come back into the 20 period and then you see some sort of crazy gap below the 50 period, that would look a lot like the February crash. And I'd be very careful trading in that environment if that was actually to happen again. Now let's look at the Nasdaq. We're going to look at the Qs on the weekly time frame. Very similar type price action, right? We marked out these blue boxes and we said, hey, you know, we typically see continued strength. Well, what do you know? We saw continued strength, a little bit of a hanging man on the weekly time frame. RSI is not quite overbought, kind of, you know, it's just right there. And then we have the price percent oscillator down right here, kind of starting to turn up a little bit right here and start to spread. You can see the signal line, the blue and the black line kind of spreading apart there. So maybe perhaps we see more continued strength like so just going into the following week. What I will mention, the next week is actually the OPEX week, which we discussed on the previous market brief. And typically on OPEX weeks, you get even more of a VIX crush. And if that is the case next week, that means the market is susceptible to higher highs. So we've got to keep an eye on that. And the daily time frame, you can see here, we're breaking out of about 4-day period of consolidation to an all-time high again on the Qs, still within this channel. So you got to understand, structurally speaking, we're still within this channel. Nothing has broken to the downside or to the upside as of yet. We are still in bullish context. You can see the 20 above the 50 and clear above the 200 period moving average. Russell 2000. Russell 2000 on the weekly time frame. This, structurally speaking, is absolutely bonkers. You can see here a long upper wick, but still a very bullish follow through. This could be a shooting star type candle, so we got to pay close attention to that. This could be the start of a move down, but as you can see, it's just been straight up vertically. You know, it's just completely vertical. So you got to be very careful trading this. I've been saying, like, this is not something that I would go long on, but this is something that I would potentially hedge short on gap ups. When you look at the daily time frame, you can see this one did not make it to an all-time high. It's been consolidating sideways, still above this gap. If you're wondering what these gray boxes are, those are gaps. But from a structural speaking standpoint too, on the daily time frame, nothing's broken down from this channel except for this little quick hit right there, and nothing's broken up to the upside. So it's still in bullish context in a bull channel as of right now. And you could redraw this out. You could say and argue, oh, it's a rising wedge, you know, whatever, you know, do it however you want to do it. I'm just drawing it out as a channel at this particular point in time, but it can go either way, I suppose. Now let's get into some stock market indicators. I'm going to go ahead and put this back to the side and bring myself back into the picture. Okay, we're going to go over a couple indicators here, and then we're going to finish up with some commodities and some yields, dollar, and so forth. So S&P 500, we're going to start looking at sentiment. The sentiment of the market right now. The bulls survey, and we also had the bears survey, and then the ratio beneath us. Look at that little uptick. So, you know, we had a strong week, continued making all-time highs in the S&P 500, have a little bit move up higher, still not as high as the November bullishness, but you can see the sentiment is getting more bullish as of right now. And then you see the ratio of the bulls to bears, not quite in the 2.0 range, which is a little bit overextended to the upside, but we will kind of monitor that as time continues. But you can see it also spiking up there as well. On the NIM exposure and the RIDEX, this is, you know, what our asset managers doing. Okay, last week we were right around 80, and then pow, back above 100. That means they're max long, using leverage, pretty darn bullish. And you can see here on the RIDEX, what is, you know, where's this money going to? And you can see is that the closer it gets to zero, which means it's moving up, right? I just have it inverted here. That is just full bullish momentum. Okay, so it's very, very bullish sentiment reading this chart. The Pring bottom fisher recently just crossed above. We were marking this and watching this. We marked out other times that it crossed above, and you can see continued strength. Sometimes we go a little bit higher, but then we collapse down. So we go up higher, pull back. From here, this was really good at finding the March bottom, and then it went here, it went down, but then continued strength up. So perhaps we see something similar. You know, it came down into this below the black line. This is good at marking bottoms, but we didn't really catch a bottom per se. But what we did do is we pull back here. Okay, this is what I want you to pay close attention to. We pull back here, and then we started crossing itself over. So maybe that we found this bottom. That's what this crossover is entailing. And if that's the case, that means this bottom was actually spotted right here, but it was just done so a little bit later. And then this bottom right here was actually spotted by the spring bottom fisher, and then it continued to move a little bit higher. But then obviously the seasons changed there. As you can see, we pulled back. So perhaps that's what we're seeing. It's finding this particular bottom just a little bit late, which would make sense to me from a technical standpoint. And then we can potentially see, yeah, maybe pullbacks, but perhaps this would entail that we're just going to maybe perhaps come down, but stay within a bull channel. So it would put in another higher low and the bullish context continues. So that's a very strong possibility there as well. Now we have the BPSPX. The BPSPX, I'm only looking for signs of oversold or overbought. And as you can see, we're coming right back up into this resistance there. So we're not overbought yet, which tells me that we still have continued strength. Now, what is interesting is that is clearly a negative divergence on the RSI, clearly right there on the BP chart, and you can see the S&P 500 continue to make all-time highs. So we got to pay close attention to that specific divergence. Here's the sell signal. The sell signal, you can see the CPC in the background, the purple did uptick, okay, but we're still on the 10-day period moving average. The black line has not crossed above 0.8. That is the sell signal, so we're keeping a close eye on the sell signal. The VIX is very interesting here. All right, so I want to blow this one up and then disguise myself, and we'll look closer at the VIX. So we did state that this pink box was kind of that area, which I removed the pink box, but when we come down into this area, this is the start to make sure you're taking some profits off the table, because the fact we might see a move higher or we see this consolidate. Now, we also stated not only the pink box, which we saw that period of consolidation, but we have the potential to fill this gap. This is the first time we closed below 20 since the crash of March, right? So you can see 1997, and that's not a year, 19.97. You know, we closed below 20, and if you'll just look back to the left, there's been, you know, it wasn't until late February when we were there last time. So perhaps we come to fill this gap, which means we can see continued momentum, continued strength, buying up the S&P 500. But just note that relative speaking, when you come into areas of, when you get gap fills, they can act as support. So if you come down to this area, you could get a spike in vol. So you need to be careful in this current environment. You can see that this trend line going down has been acting as resistance. And then this one too, we saw the price come back up to it, but then clearly got rejected, down 6% for the day. And you can see that in all the indices were all basically up. Now let's look at the S&P 500% of stocks above the 200 period moving average. We're now at 88.58, which means 88.58% of the stocks are on above the 200 period moving average. And clearly it's been grinding at that high level above in the 90s for quite some time. Typically, and I usually point this chart out when I kind of zoom out where you can see multiple years, but when you get to these high levels that are above the 200 period moving average, you get a lot of overextended stocks, and then you see pullbacks that are quite significant. So we haven't seen that pullback yet. It's just been continued grinding higher and higher there. This is the high low. We started to see a pullback come in, but now back right up to the top, if not even higher, 98.75, just massive jammed up there. You know, no problem with anything as of now, apparently. We have breadth. Breadth was down 18.49. This really helps me to just kind of track overextended moves to the downside or the upside. So if it goes way up to up breadth, then potentially we might see a pullback the very next day, not by like a 10% move, but it could present itself an overextended move. And when it comes down here to around minus 80, those type of overextensions offer up good buying opportunities. As you can see, if we just look straight up, that was an overextended, that was overextended, this double bottom, and we also had a double top there that resulted in lower moves too as well. So right now we're kind of just trending positive breadth, negative divergence there as well. All right, now it's time to get into some commodities. We're going to start off with gold on the weekly time frame. Gold Finished slightly up, 10 bucks for the week. However, it was up higher and then got rejected by the 38.2 fib level. Could not break out above this red resistance line. If we start closing below the 50 and even potentially below this 50% retracement level, 1767, gold has been really trading like a currency. You can see, just the correlation between gold, the dollar, even yields, just how this has kind of been interacting with, certain moves. The price percent oscillator has been just trending down. It's still slightly above, nope. The black line there is just now below zero, but the blue line is still above zero. So this is pretty significant downtrend. However, you do see the histogram kind of going sideways to up. So potentially, maybe this is kind of this area where we start slowly picking itself up and then potentially moving higher. But as of right now, gold has been just kind of the lagger, as you can see, putting in lower highs and lower lows. Silver, on the other hand, already looks like the price percent oscillator wants to flip over to bullish. You can see the black line here curling itself over and the blue line too. So the bullish crossover might take place here soon. Price is above the 50 period moving average. Price is above the 200 period moving average. And it is still within this little channel. You could call this potentially a cupping pattern before we start seeing, continued strength. If we break above 30, there's no reason why we can't even head higher to 40. That would be probably the next period of consolidation there. Then we got WTIC. I did post a chart on Twitter of WTIC where I looked at the OVX. I think it's OVX, is the volatility of oil, and then comparatively to the WTIC chart, and we looked at the Bollinger Band extension. So this area where it's at right now leads me to believe that we're going to see a period of taking a breath or a period of consolidation. Could be right around 60 bucks. I could be wrong, but just looking at how they are extended both on the Bollinger Bands from a, the lower Bollinger Band from a volatility standpoint, the upper Bollinger Band from a WTIC standpoint, makes me think that, okay, this is a period where we can start seeing some consolidation potentially. But we have seen strong strength with the WTIC. So energy stocks been performing really well. Oil, obviously, performing extremely well, up 4.61% for the week. So yeah, just crazy moves overall for commodities. CRB index right here is coming into an area of resistance on the weekly time frame. We're looking at about 190 as a wall of resistance. We are overbought, so if we start breaking above this resistance, can then become support. So let's look for a weekly close above 190 to give us some confirmation that, hey, there's a lot more room to go for commodities. And we saw that at the very first chart, which I'll flip back to, that we went over on the GSG. Where is it? It is right here. You can see that we are, just this resistance line. We're coming up to an area to potentially break out of it. This could be the start of just a very, very big move overall for commodities. Now, was that the last one? Oh yeah, no, I wanted to throw out this one too. So it's chart of lumber, big hanging man candle, but we had one last week too as well, or last week as well. This is absolutely crazy. So a high of 991. So lumber's been going out of the, just through the roof. Michael Guyad, when we had the interview, he said it's a good leading indicator for housing. Okay, well, housing's been going through the roof too. It could be because, well, the cost of lumber is going through the roof. So the cost to build new homes is rising. It's making homes that have already been built more valuable because of the cost of lumber. Now, people are saying, it's a demand issue or a supply problem. And yeah, that's all accurate stuff. But keep in mind that the supply can be fixed by a level of demand. And demand, what fixes demand? Well, what fixes high prices? Well, high prices cures high prices, I believe is how the quote goes. High prices cure high prices. I've heard that somewhere, quoted somewhere. And what that basically means is, well, the higher this goes, it's going to come to a point where people aren't going to want to, it just doesn't make sense, buying lumber at these costs. So then the demand shall decrease, which would increase the level of supply. Now, another thing to note though, why can it potentially continue to go higher? Well, the Fed has already committed to crushing rates down to zero and doesn't see themselves raising them, or is not thinking about raising rates, which makes it fuel this frenzy because you can get more expensive homes at a reduced cost, per month, with lower rates. But, looking at yields and stuff, we're starting to see yields spike up. So it's going to be just interesting overall how this all plays out. You got to just be very careful in these environments, clearly, because there's a lot of risk out there, okay? It's not just a one-sided trade, even though it's been kind of acting like one. Let's look at the dollar from a weekly perspective. All right, we marked this out before. Falling wedge, week, right? So a week, down 0.56. We were up, and then we were back down. This could be the early stages of a breakout of this falling wedge. We do have the price percent oscillator. It is bullish crossed over, but it is pretty far below zero, so we can't give it too much weight. And the RSI has a bullish divergence as well. So I've been saying this. We can't really do anything until we get above 92. So I don't think that the market's going to react poorly to a rising dollar until we start seeing it go above 92. And that move has to be actually like a very strong move through 92, and we need to see it move sharply through it for the markets to react. This little tiny moves to the upside, I don't think the market's going to quite react to that. But what the market does do is it does react to a falling dollar. You can see here on this kind of chart, you have the USD right up above us, and then we have the S&P 500 just lower. It's just mirrored exactly. Okay, the perfect reflection here. Lower lows, and then this one's putting in higher lows, the S&P 500. So, we're in a bearish trend here with a highly shorted trade. So it's potentially exposed to being short squeezed, right? Which can shoot the dollar up higher. But now the S&P 500, which you got to take into consideration, is the sentiment. And the S&P 500, we have the NIM exposure, right? So everybody's maxed out long and using leverage. So their exposure is to the downside maxed out. So this is just very interesting how this could potentially play out looking at both of these. But when you really look at it, people are exposed on both sides. So first off, people that are short the dollar can be exposed if they have to cover, and then you start seeing a squeeze in the dollar. Or the S&P 500, if we start seeing that move sharply lower, you're going to have risk managers across the board that are already maxed long. They're going to have to react very quickly, which can add to the selling pressure. So if a rug pull does take place, you can expect it to be a lot quicker and a lot aggressive. And what we've been seeing in the markets has been just interesting intraday activity where we do get a sell point, and then all of a sudden it just goes boom, 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 boom. Just a very, very quick hit to the downside. So have stop losses, manage risk. That's what you got to do. Let's look at bonds and yields. Okay. Holy moly. They continue to move higher, right? Another move higher on the 10-year, which is the blue line. And then we have the 30-year also just creeping higher and higher. And then the spreads continuing to spread higher and higher. So you got to think here, what's going on with the bond market? I'm no bond professional, but typically when you see a steepening curve like this, and then you see, rates pick up, it's, the market and, looking at all the economic indicators and all the economic data that comes out and say, hey, okay, we're pricing in future growth, future inflation, et cetera, et cetera. But I just have a hard time believing that this is growth being priced in. And the reason why is because of what the Fed policy is currently doing. So I think that we're just pricing in higher inflation. That would make sense to me. These rates are starting to move higher. Are they going to continue to move? I don't know. I don't know when the Fed's going to have to react to these things if they keep moving. Relatively speaking, we're still low, relatively speaking, but we've seen recessions take place where we see the curves continue to steepen off an inversion, and that's typically where we start seeing some crazy price movement in the markets. When we look at the TLH, we had that big spike of volume, a little bit of an update, but remember we marked out this one here. We saw movement down. Here was up here, and we saw that movement down. And the other day we're like, oh, well, maybe that's not what's going to be. Maybe we are going to see some strength. But now you can see that gap down closed below this channel. So I don't know. Maybe this is start to another leg down on the 10 to 20 year, the TLH, or in the bonds. So just interesting stuff overall. All right, everybody. So that is what I got for you on the market brief. I'm going to wrap up with the conclusion. But before I get into the conclusion, I want to go ahead and ask you guys to leave the feedback on the new setup. If you like it this way, cool. If you don't, I can go back to the old way. I know I'm going to get a lot of mixed reviews, but I do see people that comment very frequently. I'll probably listen to those words a little bit more than the other people, but I do encourage you to kind of let me know, and so I can familiarize myself with what your icon looks like or what your name is as the time progresses. So just to kind of wrap my head around the closing week going into next week. First off, I'm looking at the sectors that are going to be performing, okay? And I'm looking at energy, I'm looking at commodities right now because of the rising yields. Okay, so it looks like the price of it looks like an inflation trade taking place. People say inflation trade, whatever. It is what it is. Those are the sectors I'm looking at from a relative performance standpoint. Also, a little bit into materials still as well, but I'm pumping the brakes just slightly because of how gold has been responding to the rising yields. Okay, so I'm going to be looking at multiple sectors going into the next following week. It is OPEX week, and what we have seen in the past is we've seen the VIX continue to get pulled down even further in those weeks. Not all the time, but that would entail that we're going to see more more euphoria, more momentum to the upside going into next week. So you got to be prepared for that. But as always, we are in very interesting times here in the market. So play with caution, have stop losses. If you want to live in this game for a long period of time, and if you want to do this, you're going to need to understand that you're going to have to manage risk. And that is the only thing that we have complete control of in these markets. So that's all I got to say. See you on the next Daily Stock Market Brief, everybody.